I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're chatting with Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, his website, oilandgas-investments.com. Welcome back to the show, Keith.
Jim, God bless you.
Crude oil prices down for 5 days in a row. Is that a dangerous trend?
Not yet. No. I think that we had such a massive run-up. So the oil price doubled basically in 3 months from February to May. So it's just hopefully it's a pause that refreshes, but it would just the market got very frothy, Jim. There was just so much speculative interest both in the commodity buying futures contracts for oil and for the stocks that it absolutely needed to do a little bit of a pause, and that's what we're seeing here right now.
The price hike at the pumps for most Canadians, not all that much. Is that because the Canadian dollar enjoyed the same ride crude oil did?
Yeah. The dollar was lagging, but it caught up, so it's doing fine now. Interesting to see. But what's interesting though, Jim, is that the dollar has actually led oil prices. So the currency market has been a much better guesser on oil prices than the equity markets, and even the physical product market as well. So the dollar's kind of backed off here a little bit now. I'm not sure what it's doing today, but if people are looking to think about where our oil price is going, and of course everyone has 5 opinions on that. The Canadian dollar has actually been one of the best prognosticators of that.
Well, also, it seems to me there's less dependence on oil, with Ontario and Quebec leading the nation in job creation last month, and those were manufacturing jobs.
Oh, the street doesn't care about that, Jim. The street wants to just understand something simple. They just we are a petrocurrency right now for the world, and nothing that Ontario or Quebec does that is going to change that. They would have to come up with some massive new industry that creates like 500,000 jobs in central Canada that is completely unrelated to hydrocarbons for the world to change their view on what Canada is.
Saskatchewan Premier Brad Wall has said now is not the time for carbon taxes. As he pointed out, 500,000 jobs depend on the oil industry right now.
Yep, I saw a good chunk of that interview, and he's right, but I think the time is that you got to start the conversation now, and I think the industry has been a real laggard in getting ahead of this climate change issue. They need to get ahead of it. They've been way behind it, and if they choose to stick their head in the sand on this issue right now on the carbon tax, it's only going to come back to bite them in the rear in the very near term. So the industry, this is where public opinion is firmly entrenched right now. Personally, I'm not a big believer in the climate change argument, but I would say that as an industry, as someone who relies on the hydrocarbon industry, we had better figure out a response to this and be proactive in dealing with it in a way that draws some appeasement from the general population, so we can get a bigger social licenses, so we can get more pipelines built, so we can get on with our business. And you only have to look and see what's happening in Ontario to see where they're talking about completely phasing out natural gas, one of the cleanest hydrocarbons in the world, and it's costing them a fortune. That country's, that province's finances are going down the tube. So the world still needs hydrocarbons, but the industry, sadly, still really isn't kind of getting out in front of this issue.
And, of course, if you're going to phase out one of the most abundant, cheapest fuels in the world, that's going to cost you a lot of money, isn't it?
Well, yeah. Now, they've got some nuclear, which is just, good for them. But truthfully, the it's just not that simple to change all your infrastructure, your delivery mechanism on a dime, and do that. And so again, that province is sadly going the wrong way here in terms of their economic ability, and a lot of it is because of the some of the crazy ideas Premier Wynne has on what kind of energy the province should be using as opposed to letting the market decide.
Well, I do know the leader of the Wild Rose Party was totally rude to her when she visited the Alberta legislature, but perhaps he's expressing what a lot of Albertans feel.
Could be, Jim. Certainly, being civil, though, is honestly the only veneer we have between us and others for a lot of time, so you got to keep that strong.
Yes, I was shocked. I was born in Calgary. I was brought up to be polite. You treat guests in your house as guests in your house, not as somebody who's in there to steal your silverware.
That's right. I grew up on a farm too, not in Alberta, but so yeah, we were brought up that way as well.
There's been a huge downturn in the capital investment in energy in Canada and the U.S. Somebody estimated in Canada alone something like $1 trillion not spent on looking for new oil sources or expanding the technology to look for oil. Has that really hit the economy in secret ways we can't really see?
Well, it's possible, I guess, Jim. The reality is that, of course, because the number of layoffs directly associated with all the drop in oil and gas prices has been so severe, it's been so newsworthy that it's just kind of drowned out kind of what some of the longer term implications are going to be. But basically, you're going to see the supply chain for oil and gas, particularly big project supply chain. So any new oil sands projects, anything offshore is just going to be dead. So anybody who handles those types of products and sells them to the industry is going to notice a massive and longer-term turn down. Like those big projects in the offshore industry, those two sectors they're not coming back anytime soon. The majors have been very clear that they're now looking to shale, to the short cycle energy sources that are much lower cost, that there's not enough clarity on what OPEC wants to do with the oil price to warrant them spending any money on long lead time, big multi-billion-dollar projects.
Has anyone done studies on the availability of oil, say, 5 years down the road, 10 years down the road? Will we always have this glut sloshing around?
Oh, well, the market is constantly trying to figure out, and you see a guess in the media every day as to when the market will, quote, balance out. And I think Peter Tertzakian at ARC Financial in Calgary did an awesome story a couple of weeks ago in a very humorous way, where he basically explained in the context of three guys at a bar that the oil industry is never balanced. It's either in gross oversupply or gross undersupply. It's just a boom and bust cycle because of human nature. We cower our heads in fear and don't do anything in times like this, and then when times are good, we spend like drunken sailors. So I think that right now the market is torn between whether we're going to balance out in late 2016 or mid-2017. So, but the point is that that time is coming. Every day we get a little bit closer to that. And I guess, Jim, the big thing that we have to look at right now is that it is balancing, getting into better market balance, but it is really slow. Like even today, that the U.S. inventories came out, and there was a small drop in production, there was a small drop in inventories, but we're talking about drops, like droplets. Not nothing, but not significant. So the pace of change here has been really slow for the bulls. I would have to say that the bulls are really jumping the gun here. But honestly, Jim, if oil can stay here at $50, that's pretty good.
And being down the last 5 days, $48 isn't that far off 50.
Oh, no. We've been, technically, Jim, oil's trading awesome. Like, you look at a chart that doubled in 3 months and then is staying and consolidating, not in the mid-range, not in the mid-upper range, but in the upper range of its trading range, that's very bullish. Like, it is. Oil as a commodity price is actually trading really well, because the other thing that happened, Jim, during a lot of this time was that the U.S. dollar started to rise again during the last half of oil's run here from 25 to 50. So when the oil price is going up as well as the U.S. dollar, very bullish.
We'll have more with Keith Schaefer right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Keith Schaefer. Keith, a week and a half ago, 2 weeks ago, the interior of BC saw some service stations put up close signs because they had run out of gasoline. We had no prior notice that that was going to happen. In the U.S., they have a law that says consumers have to know if there's going to be a shortage, perhaps so they can stock up early as much as you can with one single gas tank in your vehicle, unless you're a semi-truck driver. But do you think we need to have that law? And were you surprised that that happened, that they ran out of gas at some Petro-Canada stations?
Well, Suncor has said, Suncor owns Petro-Canada, and so Suncor said it's going to cost them, that the fires up in the Fort Mac area are going to cost them $1 billion. Well, anybody who looked at a news media thing here in the last 3 months saw that there was wildfires, unbelievable wildfires up at Fort Mac, and that's the source of gasoline supply for much of Western Canada. Anybody could extrapolate that, yeah, we were going to have gasoline shortages potentially.
Well, of course, Fort Mac provides a third of Canada's oil production. Yeah, that's going to take a bite out of anybody's inventories. I just thought it seemed it came as a surprise, though, that the company itself didn't say, hey, look, our supplies are down.
Yes, you're right. I guess maybe everybody was just trying to hope for the best and not thinking it would come to that. But, yeah, I'm not sure what the answer to that is. Should they have looked farther ahead and figured it all out? Yeah.
Well, I was always told that there's a 90-day gap between when it comes out of the ground and it hits the tank of your car. That certainly wasn't 90 days.
That's right. We caught the industry again, didn't we?
A study's been done looking at government subsidies for oil and gas exploration. Canada and Australia, major producers of oil and gas, have amongst the lowest subsidies in the world. Is that a surprise?
Oh, no, we're so efficient, Jim, that's not a surprise at all. We don't need big subsidies here for the energy side because we've had to suffer through lower prices, and because of our climate, we've got higher costs. So the industry is very, very efficient, and so our need for subsidies is way less than other people.
This internal war on fossil fuels in Canada surprises me because Canada is one of the coldest nations in the world and has perhaps the farthest gaps between its major cities if you plan to travel between them. How can you go and reduce your use of something that you have to use 9 months of the year to stay warm?
Oh, Jim, don't get me started on that.
I want to get you started.
The other side of the coin here, the environmental movement, they have such a large contingent of people who are completely unreasonable. Now, don't get me wrong. I'm not trying to paint everybody with the same brush, but like you look at the American funding coming in through Tides Canada to fund all the First Nations and left-wing groups throughout Western Canada. They've done an amazing job at creating the PR saying, keep it in the ground and oil's bad and now even natural gas is bad and we shouldn't even use that as a, quote, bridge fuel to getting completely renewables. And of course, getting completely renewables is a wonderful goal, and I agree we should be moving towards that, but you can't just shut down the industry. And of course, all these groups are being funded through American interests who want to keep Canadian oil hostage to the U.S. refinery complex, and B, the renewable sector wants to see all this oil shut down, and we have the culture in Canada that allows them to do that. We're very meek and mild, whereas in the States they get told to go, pound sand. So they come up here because it's easy. And because we do have quite a large amount of oil production, they can, with a very little amount of effort, create a big gain. So I don't blame them for coming up here. But, Jim, to think that the attitude that you just talked about as being, why don't Canadians do this? It's because we're the victim here of a very large group of American funding that really is driving public opinion against the industry. And that's what I said before. The industry has done a very poor job at getting in front of this and reacting to that.
And of course, whenever there's a pipeline spill, that doesn't help the public relations effort either, does it?
Nope, doesn't. But people have to understand that industrial accidents happen in every industry all the time. Though I would say that the industry definitely needs to do a little bit better job on pipeline integrity detection. I think that's a very fair comment. Again, and we've brought this up many times, when Kinder Morgan's not willing to make public their spill response plans for the Greater Vancouver area, where they've got, you know, a major terminus of their pipeline, well, that just, to me, makes no sense. The industry just goes out of its way to shoot themselves in the foot.
Now, BC has ignored the potential of tidal power. There's only one project. It's a $5 million barge that'll provide enough power for something like 5,000 homes. But very little development of tidal power, so there's lots of room there. But where are you going to develop tidal power in Alberta, Saskatchewan, and most of Ontario?
You're right, Jim. I hadn't thought about that. How would you do that in Alberta and Saskatchewan? Yeah, I don't know.
Maybe the tide of people leaving the province looking for work because their oil job has disappeared.
There you go. That's the line. You bet.
Keith, thank you very much for chatting with us.
Jim, God bless.
My guest has been Keith Schaefer. He's the editor and publisher of the Oil and Gas Investments Bulletin. His website, oilandgas-investments.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Check out our YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.